Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for a wild, powerful, upward day in the stock markets on this Wednesday. And we are at the 5th of June, 2024, and the time right now about 5:50 p.m. Central Time. So, my friends, what a time in these markets. Now, we're seeing that the JOLTS report was weak. The ADP private sector jobs came in weak, and they did a revision down last month. We saw the Bank of Canada today cut for the first time by a quarter point its interest rate since the pandemic. We expect that the European Central Bank will do the same. And then we cap this all off, by the way, on Friday with the U.S. jobs report. So as you know, the naysayers are never to be stopped. I've said that in the beginning of the year, and they will look at each event, and it won't matter if you have good news or bad news. Adding to this was NVIDIA became a $3 trillion company today, as again, its value went up 50 some odd dollars a share. And yes, on my ETF video, I do have, since December, I told the clients to buy it there. They have taken positions down as the big rally has occurred, and they're still 30% long, and I'm thrilled. You can trade different. I assume that you own 100 shares when you buy. I have no idea everybody's net worth, but that's my plan. And then you take it down. So you may buy 10 and cut it down. Now that there's commission-free trading in stocks, it doesn't matter. That's the point. So that's why I go by percentages. But it's one way to look at it. And am I thrilled? Yeah, you look for plays like this, so you can always say, no, I wasn't left behind, and yes, you were there. When we look at what this all means, well, let me give you the fear thing you should be worried about. If and when, because it's two parts, if and when NVIDIA sneezes and gets a correction, all the indices are going to sneeze and break right with it. There'll be a mini panic because nobody's used to that. The weighting of it now in the indices is insane. Why is it being bought up like this? It's being bought up, and I showed traders this in my ETF video, because you have a stock split right around the corner right now, 10 for 1. That doesn't change the company's finances. That's not what splits do. It makes the stock available to another tier of people, because instead of it being a $1,200 a share stock, it's $120 a share. And at $120, a lot more people can buy it if they feel they've missed the boat, and that drives the value up, all right? So, at some point you got to say, what's real in price-earnings relationships? But when you get to a stock like that, people don't care. They just want to own the leader of the group, all right? Now, does that always work? Nah, you saw Uber come down recently, and they are the leader in that group. But you've seen Eli Lilly keep going. But we're in the futures market, so we'll keep talking these. When that happened with NVIDIA, when that happened with the ADP number, the market and Canada, the market just went bonkers, and you pulled everything up. On its own, you were actually lower in the stock market when this began, and the Dow had came back. In the cash markets, the S&P and the NASDAQ have made new highs. If we take a look at the bonds and the notes, you're down to a 4.3 in the 10-year. Not at the 5% that so many have called for that we'd be at this time, but instead at 4.3. So with all the debt we have, with everything, you're still 4.3. Mortgages, you saw the mortgages numbers, the index, the refi, the new purchase, all down sharply because you've had almost, 9 weeks of 7% plus mortgages. So now the question is, we'll see that numbers probably in the morning. Fannie Mae, I think on Thursday, puts it out. Are they going to slip back under 7%? But that's still not going to, just because you're under 7, it's not like you're at 6. Got it? So you got to use your head with that. So on the S&P, again, the market hasn't gotten under the 18-week moving average of closes. That's bullish. It's a filter. It keeps you in the bull camp. When we take a look right here, and I'll come to this, I don't want to do it just yet. I'm going to do it on the next chart. You can see how you came down, you're coming like this. Some might say if you have a little more sideways action here, you'll have what's called an inverted head and shoulder. A neckline, a head, got that? And another neckline if it goes sideways. Then you flip this over from 52. If the neck is at 53.70, the goal would be 55.40. You're just adding the 170 points back into the 53.70 to come up to that number. And that would be up here. And another goal. I'm not saying you have the pattern or not, but I love to teach you, and that's one of the things you look at. So yesterday, and I do want to come back to this, we had talked, because here was the pattern yesterday. And we had a pattern of lower highs and lower lows. I made a point of saying to people, I said, you know, if you get over 53.18, I know if you don't believe me, go look at yesterday's tape. I said, this could suddenly turn into a buy signal because you'd have higher lows, higher highs. And what did the market do? The market did exactly that. Where did I say it might go if that occurs? The first area should have been the 18-day average of closes, but you were over it. So it opens the door for what other numbers are above the market. It's not these moving averages. It's got to be a Bollinger Band, which is right here. And you tell me what that market went up to, that zone, and where it just sort of ran out of some steam. And you get to understand the concept of what traders look for. Now, I use another vehicle also called window envelopes, but not the way that you probably use them. I teach it in my course, and then you get the numbers from me, and they're important too. Getting to this resistance doesn't mean I'm suddenly bearish or bullish. It means you're at a zone that the pros are likely to take some money off the table. I know you may not agree. You'll go, it's just going to run forever, and I know that's how people think. No. You're overbought. You're knocking on the door of the upper Bollinger Band. That's what I think is going to happen. When you come to the NASDAQ, don't you think it's sort of interesting where the Bollinger Band is and what the market rallied up to and where it's stuck at right now? Again, you're overbought. Again, the trend is up. Next, the Dow. Not in that camp, nor is the Russell. NVIDIA is the key here. NVIDIA and those other tech companies that it's pulling along with it. So you got higher lows, higher highs, the market coming up, but you got layers of resistance. You got to prove you can get back in the bull camp. It's one thing to not want to be short. This is not in the bull camp, though. And in the Russell, it is the same thing. We explained, at least I have explained over the past week, you're down to key support of the 100-day average in the Bollinger Band bottom. It is not a place to have shorts on the market. It is a place where the market is fighting a battle. Then we get to the 10-year note. And just as though this were a chart line, it's the 100-day average of closes because you didn't have 100 days. This futures contract comes on the board and it didn't have that. Look at the resistance. Look at the overbought. I'll let the other guy want to own it up there. I don't. I don't want to buy it or sell it. 5-year note, you're up to the Bollinger Band. So you either believe in this theory or you don't. I think I'm pretty good at the theory. And this is where I think the algo boys and so on are taking some money off the table. Taking money off the table is not the same as going short. It's a very big difference. It's taking your reward. In the dollar index, if you looked at what I did in the metals, I explained that here's your support, the 100-day average in the Bollinger Band. You're not in a trend. You've had a heck of a nice correction. And here's the argument you have to answer for yourself, and it could be answered as early as tomorrow. First, if the U.S. interest rates are going to stay steady, let's say until September, and if you get a cut now in the European Central Bank, of a quarter point. You've had the Bank of Canada. Should the dollar rise or fall against the currencies that are cutting interest rates? One argument is our economy is strong as can be. We're staying with a higher rate. The dollar should get a bid. Another argument could be and is those other currencies have been weaker, but now they're cutting rates to spur their economies on. So it's a futures market. Do you bet on the future instead of what's now? And you give them a bid. That's what the market's got to answer. When you come to the euro, you can see how it's fighting to stay supported. You have a higher high, a lower low, and it's finding its support at the 200-day average and the 100. It's the first move over it. We're going to get our answer very quickly. And that, to me, is the key. When we look at the pound, well, you've got an embedded reading. As long as this market's embedded, I say the pros are buying the breaks, looking for the market to rally even higher, potentially the upper Bollinger Band. Bitcoin, I've been telling traders the 70,000 level is where the market seems to be pivoting for the support. Each day you're lifting up a little bit, the 18-day average, but you are overbought. Then we get to the energies, and the differential has rallied back to the resistance point, the 18-day average. So the edge as this fell was that, in theory, the differential was changing between Brent and WTI. It was coming down. Brent was either holding steadier or going up against it, and that's how you get to those point differences. Then we come here, and what did I say to you the past 2 days? You don't go short under Bollinger Bands. Be careful. You're getting your bounce right now. Same in WTI. This doesn't mean the market's bottomed out. It means you've overextended, in my opinion, to the downside, and you got to get within those bands to say, okay, we can continue to trend down now or not. I need to see the markets get away from being oversold. They can embed or they can correct. Correcting means up here. Do you notice that we're getting the 18-day average crisscrossing under the 200? This is a bearish setup that's happening. The same thing in the Brent is happening. So you're getting a very bearish setup coming into these markets. In the gasoline, you were 2 days under and getting the bounce. I also mentioned to you the real driving season now picks up from now through the end of July. Will the market get a bounce? It doesn't look like it. And if it does, it looks like it's going to get sold, as the 18-day average is now under the 200. So here is a market. It's not embedded. It's still oversold, which keeps me away, but you get a good rally, I'm coming out, and I'd want to be on the bear camp. And I don't want to be in the bear camp in natural gas. I keep watching these heat domes form out west. Texas, Arizona, California, New Mexico. Be careful, all right? These, you're already up to 110, 120 degrees in some areas. For this time of year, you are going to possibly set records. It's only June 6th. Be careful. We have yet to see the natural gas demand come to the market. If this market can clear right here, 282.90, just like I said in the stock market, I turn bullish looking for potentially the $3 level. You've got to prove you can get back over this 200-day average and stay there. Right now, the trend is down. Got it? The bias is up, and the market's fighting that battle as I see it. So I'll be talking about this, covering it in my morning videos and the like. But a lot of you don't understand even some of this lingo, and we have our guide to technical indicators. This was put together years ago by our good friends at Modern Trader. It used to be called Futures Magazine. I wrote articles for them. I promoted them for many years because unlike some of the other magazines, which are very good, but they're so technical, if you're not in the math, you're lost. This teaches you what these are. And this is as good as the days we put this together, which was a while back, folks. Things don't change. A chart pattern's a chart pattern. The way you work with the moving average, that's it. The Elliott wave theory, again, Fibonacci numbers, Arun indicators, which is price-time relationships. All this is explained with examples, and it comes to you as a PDF. That's the beauty of it. So you just open it, you can print it, you can read it, whatever you want to do. Money management. What good's trading if you can't control risk? IraEpstein.com, free offers. Move your cursor to the top here. You'll see a link. Go get it there. And while you're there, look at the other offers and give yourself some of those. I'm Ira. You have yourself a good evening. I'll speak to you all first thing in the morning.